Hi and welcome to my channel, guys. Ocean Traders. Wow, actually started. I know I should have started this ages ago, and I know I'm gonna get loads of ag from a lot of people saying, "Oh, you should have started this. You should have started this." Because you know what it is? It's like my trading view account actually gave an insight. But sometimes people just want stuff to like video content. You know, it's not as tangible because I'm not literally there with you, but it's good because loads of people that actually subscribe to me or like my content, you guys live all around the globe, really. I doubt I'll be going to Brazil soon. I doubt I'll be going to Costa Rica soon, or Puerto Rico, or even the south of Spain. So loads of you guys actually like my content, and you can see that it's actually authentic. It's not fake or anything like that. So that's essentially why I made this actual platform. Cool. So what you're currently looking at is the USD CAD. What's going on here? Massive bull run. So what you do, make a trend line. 1, 2 bounces. Yep. Cool. Let's go. Another one. Cool. So what's actually going on here? What's going on? So it went up, down, went up, down, went up. I didn't expect prices to actually penetrate my current resistance zone. And even if it does, I'm actually anticipating prices to probably stop at this second resistance zone. Probably. And if it doesn't, it could actually ascend to 1.32 thousand. Would I trade it? Hell no. Because essentially I'm jumping in on the tail end of a trend. So it's to people that don't understand what that means. I'm speaking the foreign language. What you're actually doing is that everyone is going left, and they're going left for a reason, right? They were going right, but now they're going left. You can't now jump in feet first with loads of money on you, just darting right, because there's a reason why they're going left. So in trading terms, this trade is actually, the bulls are actually getting a bit exhausted, right? So the bears will step in, right? Now with these sharp reversals, right, to be long when everyone else is short, it could really hurt your account size. It could actually hurt your account. So that's, for me personally, I never jump in on the tail end of a trend. That's just me personally, but obviously you can do what you want in this life. But my target, as prices are approaching my ascending trend line, because obviously my free bounce or three to four bounce rule is that once prices bounce at least 3 or 4 times on trend line, you can expect, so if this is like an ascending trend line, you can expect it to be, you know what I mean, a change in trend. So like here, 1, 2, I'm expecting a bit of turbulence and essentially a breakthrough, right? Now, when this breakthrough does actually occur, my targets are the 1.24,500 level and actually the 1.26 thousand level. Yep. And that's essentially it. I don't actually care if prices ascend to, like I said, the 1.31,500 or the 1.32 thousand. That really doesn't mean anything for me. I'm not going to jump in feet first when the trend is almost going, like it's almost being exhausted. So that's just me personally. I think you shouldn't as well, because that will hurt your account, but that's really up to you. So that's the USD CAD. Oh yeah, and I'm actually anticipating this move to happen, let's say in a week or two. So yeah, that's cool. Aussie dollar, Australian dollar against the US dollar. My good God, this actually tested my mental capacity. So round about like, let's say the end of Jan, right? Got in on this ascending channel, right? But I was getting pips, like, you know, I was actually making money, but I didn't actually care about the ascending channel. I just wanted the break, right? So I thought prices will break around here. I got in around this region, right? Yeah, near the 0.79 thousand region. Ascended up to here. I thought prices will break, so essentially I took out most of my bullish positions. and it just reversed up to the 0.81,000 region, and then descended, taking out all higher highs. It ascended down to like near the 0.78,000 region. Retraced. The retracement was expected. I didn't anticipate prices to take out prior higher highs or even the resistance level we got it. But I didn't expect prices to retrace because it actually retraced on the 0.618, I believe. Yeah, that's it, 0.618. Yeah. And I'm actually anticipating prices to actually diminish down or plummet down to the 0.76,500 level. Would I trade this? Then again, like I said, if you're not already in the trade, I wouldn't do it, me personally. I wouldn't do it. It's all about capital preservation. One, I know the person I am. I can't, for some reason, I don't know, just my mindset. I can't really handle the psychological factors of holding a losing trade for more than, let's say, 5 days, right? It really, I don't know, I wake up and it doesn't work with me, right? Especially if I'm banking on that trade. So I really hate jumping in feet first on the tail end of a trend. However, if you wait, right, until prices actually reverse around this region, like I said, the 0.76,500 region, you're actually getting a discount on a very, very lucrative trade, because ultimately, if prices actually do reverse and then there's a massive bull run, which would probably take like a week or two, depending on events, upcoming events and stuff, prices could actually take out this key level and ultimately go up to the, let's say, 0.81,000. It could. It is probable. It really is. It really, really is. Obviously, to the 0.81,000, we could, let's say, 2 or 3 weeks. But really, it really is. You could add on a lot of positions on this. You really could. So I think that's one thing to consider long term. Swing trading is good, but that's what people fail to realize. There's a difference between swing trading and gambling, and also panic selling, right? Swing trading is good. To newcomers, I really don't think anyone should be advising you to swing trade, right? Because all that's happening is the amount of money you make in just broker commissions and stuff like that, just fees, right? And constantly hitting stop losses because you haven't got the psychological discipline to handle a losing trade, right? What tends to happen is that your P&L looks very, very, very unattractive to the point that you lose substantial money, right? And that same money, right, you could have made, or let's let the markets do the work for you, right? You don't need to do the work. You don't need to be anchored to your laptop or your computer. You don't need to do that. Trading is supposed to liberate you, not make you work harder. That is not a 9 to 5. And I feel like that is a problem. A lot of guys are coming into a new field and approaching it with a 9 to 5 mindset. It really isn't. Let the markets do the work for you. And if you have a very good fundamental background as well, you could go probably 2 days or 3 days without actually looking at your account, because essentially you've already forecasted everything that needs to happen, both technically and fundamentally. You could go on a holiday and come back. But obviously, I don't know anyone personally who's at that level. Everyone really checks their account size. But yeah, so that's the Australian dollar against the US dollar. So like I said, I'm expecting prices to actually retrace, actually pull back down to 0.76,500 and then retrace all the way up to the 0.81,000 region. Let's have a look at Apple. Has Apple actually found resistance? I'm telling you right now, if prices actually penetrate our current resistance level, because I think what could actually happen is that we get a triple top. But looking at what's actually happening, if prices actually penetrate our current resistance zone here, we could actually be looking to go on the upside or potentially shoot back down, right? But I'm still bearish. You see, I'm still bearish, right? Because essentially, if this breaks this trend line, we could see prices decline as low as to the 162 level, right? That's a very lucrative trade Very, very lucrative trade, right? Very lucrative trade. So obviously you could be put up put option for you American guys, because obviously but you put on a put option on this and then your quid's in. But like I said, if this actually penetrates our resistance level, expect a very, very sharp pullback, right? But ultimately, I wouldn't be short. I wouldn't be short if it penetrates our resistance level. I would probably leave it alone for a while. I'll leave that stock alone for a while. Let's have a look at the US Wall Street. So what we got here? I was actually expecting prices to actually pull back down to this level, right? However, I'm still short on this trade. I really am. Because I think that, let's use our FIB. Prices could actually retrace on the 0.5 level, right? Actually all the way back down, right? All the way back down. I wouldn't exit my short position on this at all. On the US Wall Street, I wouldn't do it, because my actual bias, my target profit on this is actually the 23,500 level. And just because it's bullish now, that doesn't prove anything to me. If prices penetrate 0.618, then ultimately I would be gone. But until that happens, it's still bearish for me for the US Wall Street. Same with the CAC 40 index. I'm still bearish on it, at least down to the 5,000 level. And the next one would probably be, let's have a look. Next one will probably be 4,880 level, me personally. Let's have a look at the Australian dollar against the Swiss franc. What's actually going on here is that prices actually shot all the way back down, right? All the way back down from highs of 0.77,000, creating significant lows. However, what's going on here? What's going on here? Bit of consolidation, but what's actually going on here is a symmetrical triangle, right? Will prices break to the downside? Yes, my bias is still bearish. Discounting everything that we've seen here, my bias is still bearish, right? It's going to be a choppy ride down, taking possibly 2 or more weeks. But yeah, my bias is still bearish. My target profit, however, 0.70,500. That's Australian dollar against the Swiss franc. I've already covered US dollar, Aussie dollar against the US dollar against the Canadian dollar, Aussie dollar against the Swiss franc, CAC 40, US Wall Street, Apple. Let's have a look at gold. Why not? Right. Gold. First bounce. Second bounce. What's going on here? Is it going to break out? No, it's not. Prices are actually going to plummet down to lows of 1,296. Down to this low. And potentially 1,284. I think that potentially by the end of this week, we could be able to take profits on this. And to those guys that really panic, right, in their position, just because prices actually retraced doesn't mean that you're wrong. This is it. This is why you need to actually get authentic education in this, right? Because you could be in a winning position, but the minute it goes against you, you exit your trade, only for it to go back in your favor. Now, when this happens on a consistent basis, it will cause you to go mad. It really will cause you to go mad. That's why you need that discipline and understand the psychological factors behind trading, right? Trading itself isn't that difficult. The reason I say this is because if you're in a specific market and you know what you want from that market, and you hedge your risk and you use very good technical analysis, right? Because the markets occur in a very cyclical nature. Essentially, all you're doing is analyzing supply and demand. That is literally it. And it works in your favor because the market works in a very cyclical nature. So if you just sit back and let the markets come to you and you just do the same thing you're doing again and again and again and again, It could get boring, but you're making money. And then you go from a micro stage to a macro stage. Whereas you start out with, like, let's say a $3,000 account, turn that to a $10,000 account, then possibly a $50,000 account. And then you present your results to, like, let's say a hedge fund, or like just start going into the institutional level. That's the goal. That really is the goal. So I think that one thing I see a lot is that guys actually discredit themselves. They'll have like a $1,000 account and they'll be saying, you know, I'm not this and I'm not that. It's like, it's complete stupidity. If you understood leverage and margin, right, you could flip that $1,000 account within a week to $5,000. Easy. In the right market conditions, if you hedge your risk. Very simple. I'm not just saying Forex. I don't limit myself to just Forex. I'm saying indices, spread bets, CFDs. Because if you understand price action, right, markets doesn't work. They don't work in isolation. You could be in all three markets. You could be in 4 markets at the same time and hedge your risk. So you get, what tends to happen, my approach on it, and what tends to happen is that you get loads of exposure on currencies. I was just using commodities. You don't need to just restrict yourself to currencies, because there's loads of politics in currency pairs. Loads. Right? Not to say that commodities aren't manipulated. They are, but they're more manipulated on an intraday basis. Right? Not necessarily on a long-term basis. Whereas if you're trend trading rather than intraday trading, you wouldn't care about that. A minor fluctuations, you wouldn't care about that because you're trend trading, right? Currency pairs are very, very, very liquid, right? So yeah, that's the difference. Like you could get the same exposure on commodities. You don't need to limit yourself, but what you need to do is actually understand the difference, understand the market you're in, and actually go out there and actually look for help or guidance or mentorship, or just someone actually offering a course. Now, I'm actually creating content for you guys to understand intermarket analysis, price action, fundamental analysis, all these things incorporated, and you'll be making money in loads of different markets at the same time, not just Forex. I think guys I think are really good. I've had a look at. I've actually spoken to as well. Astro FX, they're really, really, really good. Really good. I will be getting exposure to cryptos very soon, because the bull run is coming very, very soon, and I will actually be updating you guys on that as well. And who knows, I could actually one day potentially create content, but everything is very, very, very time limited. My next video on YouTube potentially could just be about oil and other commodities as well, and stocks, and that's about it. To be fair, that's about it. But yeah, guys, just tell me what you want, and I give my 2 cents where I see markets going, and yeah, that's it essentially. So yeah, nice talking to you guys. Update me, like the video, subscribe, comment, interact. Don't just be passive. If you want the content, email me. If you want exposure to the markets, email me, get in contact. Yeah, I just broke through gold, Euro USD, no, not Euro USD, that's boring. Gold, USD CAD, Australian dollar, Apple, US Wall Street, and the CAC 40. So yeah, ultimately, there'll be a lot more videos coming, but yeah. Alright, enjoy the rest of your day, guys. Take care. Bye-bye.